Welcome to yet another daily market analysis. This is for tomorrow, October 24, 2024, Thursday, a weekly expiry day for the Nifty. Let's get into the charts first. Here we go. What you see is Nifty 50 charts, and buying demands are clearly saying it's expanding on the downside, indicating more downfall. Candlestick, if you see, it's an inverter hammer. And the end of the trend could be indicative of a reversal, but it's not a confirmation. It's a confirmation only if it moves above the high or below the low of that candle. So if the market managed to go above the 24,603 tomorrow, then probably that could be indication that this is a bottom. Otherwise, you don't have any hope. Yeah. So it's sliding down, and candlestick is it's a small body. Small bodies are always indicate the indecisiveness that the index is having. And look at the pattern is Banknifty, exactly the same candle. It's an inverted hammer and Banknifty also, and both movement is closed actually flattish. Intraday price action was also range bound in the case of Nifty and the Banknifty both, right? A more violent range bound moves, finally ending close, finally ending the close with a flattish one. There's also violent range bound moves you can see. So flat calls and indecisive markets when bias is bearish. Okay, that's what it is all about. And momentum indicated RSI is showing that it is in the bear zones below the 40, and trend indicator ADX is showing it's in the negative zones. So bearishness is increasing in the Nifty, and bearishness is reducing in the case of Nifty, but both are trend wise it's bearish, momentum wise it's in the bear zones, and candlestick wise it's bearish, and moving average, everything is following the bear zones. Let's try to find the support and resistance. So first hurdle is the 24,904, which 994 is nearly 25,000. So 25,000 is the big hurdle ahead as of now. And after that you have the 25,173, where you have the previous resistance, then 433, this is again previous resistance. Then we have a gap at 25,720. Those are the rest of the upside downside. For support, major one. So right now it's at exactly the support zone, which is Fibonacci 38 and 100 exponential moving average below that, just below that. So climbing above the 100 exponential moving average is also crucial. As of now it's down there. So if that slides further down, it can find support at Fibonacci 50 retracement level at near to the 23,900. So 24,000 is a rounding number. Previous swing low is also coming near to that 23,900 zones, 800 zones actually, right? So, yeah, 900 zones. So 24,000 is going to be a major support. So that is breached. It goes to 200 exponential moving average, which is also very close to the Fibonacci 61, right? That is coming at very close to the 23,350 zones. Right, so that's how it is support to the downside for the Nifty. Banknifty, on the other hand, would have the major resistance at this at this 20 exponential moving average at 51,790, right, and 52,000. So 52,000 is the major hurdle Banknifty has to take out. After that, 52,870, where there is a gap, that's major resistance there. Then you have the necklines at 53,358, and 53,000 is the next hurdle, just close by that, right? So that's resistance upside downside. We have the 51,100, so 51,000 rounding number. That's the also the 100 exponential moving average. Just managed to close above that, so that's a good support zone. It was retested previous week as well at the same zones of the 100 exponential moving average. So if that support cannot be held, then it goes to the 50,200 zones, where you have the Fibonacci 50 as well as the previous swing lows. So it will retest that previous swing low. If it cannot sustain, then it goes to the previous swing lows further down at 49,650. That is also not holding. Then go to the 200 moving average support at 49,382. So anything beyond that would be dangerous because it's a Fibonacci 61 breach. So 50,000 also above this before it leaps down to the 200 exponential average. We have the big rounding number 50,000. that would act as support before it gets to the previous swing lows at 49,650. So those are supports and resistances for the Bank Nifty. Now we have momentum. You see volatility index is spiked not much, around 2% today. So it has been increasing and climbing to this at 14.65. So it's from 13 to go to 14.65. So it spiked now slowly. So it is climbing from low volatility to medium volatility range. So given out that there's some number of fear that is there. And if you look at how the different sectoral indices and markets, how they performed, it's only the IT that did well today. Solid green candle. Once again, heading back after the, it has been consolidating since a very, very long time from the August, right? That's the only sector that is green. FMC also shows some flattish green. Those are all flattish down, with pharma taking deeper cut at more than 1.5%. So it's a mixed bag. So if you see, all the sectors are in their zones with respect to the momentum below our 540. Right? Now mid cap index had taken a beating yesterday, but it tried to bounce up. Is that a mid cap bounce? You don't know. So 9% correction has happened on the mid cap and small cap index so far, but that's nothing. It's still very close to the all-time high. It had been overvalued and it was running crazy valuations since long time. So more corrections could be expected there, but today it managed to bounce up after previous couple of days of correction, and that's about it. Then the heavyweight stocks, HDFC Bank for some reason is trying to attempt to break out once again, but the volumes are there, so it may not sustain this time also. There's its range more in the medium term. If you look at it, this is doing zigzag consolidation is what is happening on the medium term. So once again it's moving up towards the 1,800 where the breakout zone is there. So let's see if it happens. But that is what is holding the market from falling. Lens has fallen to the bear zones and it's reddish. So recovery seen in the IT stocks. It seems the IT sector was performing today. It's 1.18 and 1.26. So Nifty, ICICI Bank and HDFC Bank are only three heavyweight stocks that's still not fallen to the bear zone for short term, but those are all Kodak Bank, ITC, they are all in the bear zones, but at this momentum RSI below 40. Right, so today some IT is only stock that performed as along with the HDFC Bank. So this is what has happened today. Right, Bajaj Finance moved well, IT stocks moved well, HDFC Bank, it was also moved well. But banking stocks, it is only the LTC and a bunch of national banks, some nationalized banks. That's a price action. So we have an expiry tomorrow, so let's look at the PCR from the Nifty. Build-up is short build-up. The futures are high, and the Banknifty it was long unwinding. Both are bearish in nature. But there's no open interest. PCR is negative 0.62 and 0.86 in the Banknifty. So Nifty expiry is there tomorrow weekly. So it's having bearish bias. The range is 25,000 and 24,000. Very wide range. A lot of resistances have got built up. Right from the 24,500. Lot of. So market may slide towards the 24,000 or hover around it within this wide range. That's what levels for tomorrow. So correlate that with the levels of the charts that we are already seeing. That's what we are. So FS has been selling like crazy. So it's like nearly 90,000 crores of selling today. Also they might have sold 90,000 crores is selling that has never happened in the COVID times. So heavy selling. That's fundamental reasons. What they are saying is because of global fear on the Middle East crisis, one thing. Then heated valuations, another thing. Sell India by China. Recent policy changes in China makes them to pour money and put it there. Earnings growth has not been great in 2024 across the Nifty 50, so there's some slowness as of now. Then the IPO, big IPOs take away money, right? Money gets shifted there. Right? Similar to how the gold is where the money gets shifted when liquidity is riskier valuations. Right? So this is the fundamental reasons that people say. So we are more interested in the technical side. So otherwise, US markets are at the very top, showing some flattish close. Gold is the very all-time high right now. All-time high gold. So there is something to worry about in the equity market there. That's why people are shifting the money there. Oil is kind of red day. Below the 70, it should be okay. So the view is that market charts are clearly saying it's negative trended. More corrections could be expected. It's expanding on the downside. Banks are showing some strength, but that's just because of the HDFC Bank for some reason. Otherwise, Nifty also is weak with respect to trend in the momentum. So play it safe and play it tight stop losses either way. That's a market view. Mild bearish or mild to moderate bearish. Probably moderate bearish as per the charts. That's all I have. Thanks for watching. Happy trading. Happy learning. Bye bye.